Hey guys, what's up? It's Awesome Booley, and today we're going to do a live Q&A with someone from the Discord group chat. I'm Awesome Booley with Options Traders, and the Options Traders Discord link is below. Please give it a like, comment, or dislike if you didn't like it. Just tell me what you liked about the video, what you didn't like about the video, and I hope you learned something. Just a brief overview. I wasn't prepared, of course, to record this because, again, I'm not the best YouTuber, but whatever. The sound quality is a little low at the beginning, and then I realized that, and then I increase it, so it should get better throughout the video. So I'm sorry about that. Please subscribe, and if you want to get on a live chat with me, I'd love to, because being a trader is sometimes a lonely road, so I'd love to chat with other people. You'd have to message me either below, but the best place would be on the Discord link. Now let's get into it.
Okay, so I'm kind of looking at this, had this nice channel uptrend, kind of broke that this past Friday, had this huge downfall. I'm looking at a really strong support around 162 for a possible uptrend, right? So I'm looking for possibly a divergent high occurring. With this line I have set up, it followed it pretty well, substantially. Rejected it kind of, and then just shot down past that 163 and uses 162 as a support, which is kind of what. Why this isn't working? Okay, there we go. So yeah, that 162 area as a support, and so I pulled up the trade for it, right? And I guess kind of this is where my question comes into play. Is like, we have the strike price and the actual price of the ETF, right?
Yeah.
So what's the big differences between the strike price being at 163 versus 163 and 50 cents? You know what I mean? Like,
yeah. So then that also goes into your other question about what was it, the in the money and out of the money question?
Yeah, exactly.
So like strike prices, in my opinion, like doesn't mean anything if you're day trading it.
Okay.
But they more go into like the strategy. So let's say you want to set up, like, you want to sell a strangle, which means you want it to stay between two strike prices. That's when it's like necessary, because you want to know which two strike prices you want to pick in between. But now when you're going like that's for like a strategy, like a strangle or a condor or like a spread. You want to make sure that so like let's say you want a defined risk spread, which means you want to make sure you only risk a certain amount. Then you want to make sure that your spreads on the strike prices are like the amount that you want to risk. So like if you want to risk $5, and make sure your strikes are like within $5 of each other, or etc. But I don't do the strategies. I do the day trading. So what I look at is just which strike price has the most open interest and volume already for that day. So it doesn't really matter.
Yeah, so and that's what I'm looking at, is like the day trade. And so, do you ever do technical analysis? Like, do you ever correlate them? Like, they should play out exactly how, let's say, QQQ, that ETF. Are you familiar with the ETF?
Yeah.
Okay, so QQQ, and then I pulled up the futures or the options contract for it, and like the chart completely simulates it, right?
Yeah.
And it doesn't have like a decaying effect like an ETF would, right?
Mm-hmm.
But do you try to correlate your technical analysis from QQQ to the options, and then like have like, okay, this is my entry, this is where my exit's going to be, or do you just kind of see how it plays out?
Yeah, I base it off the underlying index. So like the QQQ, I don't really look at the options chain, because again, if you look, so like if I go onto a chart, I can see like the history of it, and I can see where it's been. But on the options, if I go into the past and I try to draw a support or resistance line, it's going to be messed up slightly because of the theta decay that happens. So your support and resistance is off. So yeah, I'm really focused on the chart, and then the options just follow it. So
okay, and so for example, all of a sudden, why does the commissions change based on the number of contracts you buy?
Yes. So for TD Ameritrade, it's $6.95 for a flat fee plus 75 cents per contract. But
Okay.
I've heard people who can negotiate it down to like $3 maybe. I'm not too sure. I don't like,
Okay.
yeah. But on Tastyworks, it's a dollar per contract plus whatever special fee. So like a settling fee. So like on most stocks and stuff, it's 15 cents a contract extra for settlement. For SPX, it's 79 cents. So on one contract on SPX, I pay $1.79 per entry, and then I have no exit fee.
Oh, so that's a lot cheaper.
It's a lot cheap. Yeah, yeah, definitely.
Okay. Because yeah, I was able to negotiate TD Ameritrade down to $4.95 a
Okay, yeah,
trade.
yeah.
Yeah, but that's like the best I could do, and that's why. Because what I did is I tried to like go through simulating trading to see it, and I just noticed that my contracts kept varying.
Yeah.
And also, if you're very confident in a play, like I understand, what did I wrote down the concept? Hold on. What do you call it? It's basically like, you know how you only use like 10 to 20% of your account on a trade, right? It's like
Yeah.
kind of part of your risk management side of things. I mean, if you're confident in the trade, right, and how it's playing out, do you ever risk more than that amount?
Well, I would say I wouldn't risk it. Yes, I do, but I don't do it initially. So
Yeah.
like, I would put like 10% in, and then if I know that the move is continuing in my direction and my planned exit, I still
Yeah.
have a space, a margin for profit until I hit that exit. Then I may just buy some more contracts, but I wouldn't go all in at one time. I would slowly add if I still have room for that stock to move in my direction.
Okay. And when you used Thinkorswim, did you ever use, the active trader tab? And
Yeah.
it shows like, do you ever use that for buying your options? Like initially, I know you look at like the trade,
Yeah.
when you pull up trader and you look at open interest, everything like that, and then you have an idea of where you want to go. When you go to sell, how does that work? Because I understand volume plays a huge role, right? I mean, if we want to get rid of it, somebody has
Yeah.
to be buying,
Yeah.
right? So how do you ever get stuck with it where you have to take like a loss or something like that? I mean, not like a loss, but you have to like you're
You have
shortening
to,
your
yeah,
margin
yeah,
of
yeah,
profit.
yeah. I don't know what you mean. So I would say I did at the beginning because I didn't trade stocks that had the best options volume, but now as I trade like with more volume. So especially if you go onto SPY and you look at the volume for the day, it's usually like 37,000 contracts or something. So
Yeah.
on Tastyworks, when I usually exit a trade or enter a trade, the first thing I do is I buy the mid price, and if it doesn't if I don't get filled and it doesn't move in my direction, like if it you know like
Hmm.
but if it starts moving in my direction, then I might adjust my price down to the ask or the bid just so I can get filled immediately.
Okay. And
Well,
like, do you ever get stuck where you have to like keep lowering it until it tries to sell?
yes, every once in a while, but
Yeah.
it's not typical because the way that you want to trade options or day trade options is you want to buy and sell into the move. So like if you want to buy a put, you want to buy it as it's going down, and if you want to sell the put, you want to buy it also while it's going down, because if the stock is going up, no one wants to buy a
Yeah.
put,
Exactly.
so you'll have a harder time to get out of it. So I mean, yes, you may quote unquote lose some profits, but
Yeah.
if you're selling it as it's going in your direction, then you're going to immediately get filled. So
Okay.
that's the best way to do it.
All right. That makes sense. That makes sense. Okay. Let's see. Oh, do you ever look at like delta values?
No, I mean,
No.
again, you would if you were doing like a strategy, but I
Yeah.
don't. So I'm only in it for like maybe the whole day, maybe an hour, maybe a few minutes. So it doesn't really affect me.
Okay. Do you ever hold? Okay, and this is another thing. I noticed like each tick, like that can sometimes represent easily 10, 15, 20%,
Oh
right?
yeah, yeah,
And so, have you ever like once you had a tick, you're just like, you know what, I'm calling it a day. I want to just take the profits and go.
yeah.
When you do that, do you ever find trouble when you try to do that, like trying to get out, or does it usually execute pretty well?
Huh. I mean, it usually executes well. I did that on I can't remember the day off the top of my head. I did a recap video on it, but basically, I day traded like twice in 2 minutes. and it was just like a 10% and then a 20% because it was like a one tick move and then a two tick move. And since I was buying and selling within the move down and it was puts, I got filled and sold like fast, so it worked.
Yeah. Okay. That makes sense. I'm trying to think what else. How long? So why did you just switch to Tastytrade just because it's
of the commissions? Yeah.
Okay, gotcha. And does the platform work very similar to Thinkorswim? Because I know the guy who made or part of Tastytrade made Thinkorswim.
Yeah. I don't know how to answer that. Well, besides the fact that TD Ameritrade is like very like chart intensive, and there's a lot of things like there was a few things that bugged me on Tastyworks. Like when you draw a line or something, you can't delete it without deleting every single line.
Oh damn.
So obviously they aren't chart based. So you do have a bit. Yeah. So you do have some problems with it, but.
Okay.
It's fine. I mean, personally, it's fine. But again, if I could have those commissions with the TD Ameritrade charts, that would be ideal.
Yeah. No, I feel you. That's a lot cheaper. Yeah.
Yeah, I contacted them and they said they're in the progress of updating charts and stuff, but it's not their number one priority. So that's what.
Yeah. And then also, when you place a position, hold on, I'll just share just to show you what I'm talking about. Let's see. Let's say you take a position here, right? It says like your max lot. So I bought 10 contracts at 173. What is it? Why are they saying at break even at 164.73? Is that like?
That's for letting your options expire.
Okay. What is that? What do you mean? Like does like at the end of the day?
Yeah, well, it depends if you're trading it on Friday. So options have a a specific expiration date. So when you go onto the trade, it'll say like 1 day left or 2 days left or whatever. So let's say you do have 1 day left and you want to hold it until the end of the day. One contract is equivalent to 100 shares. So let's say you receive like I don't know. I can't think of a situation at the moment. But if you want to let it expire, then so your strike price. So let's say it's 163 is your strike, and you're buying a put. Then you want it to be lower than 163, right? To actually make money on it, because you can buy it at like 162, and then use your contract to sell at 163. So that break-even price is usually the premium you paid plus or minus your strike price, depending if it's a call or a put.
Okay, so for example, in that last one, it said about 173. So at the end of the contract day, let's say it expires, that's at 164, or whatever it said. Does that mean I'll be taking a loss on it?
If it
It said break even. So does that mean I'm like I got zero now?
I mean. Yeah, so if you don't hit your break even, then the option expires worthless, so you lose all your money. So like if you bought, so all the contracts you bought expire to zero, so you have nothing.
So if you don't sell it by the end of the day, it's zilch.
Correct, and usually within 1 hour of the market closing, all the option volume is gone because, they're all going to expire worthless.
Dang. So like there's no power hour when you're doing like
not on the days of expiration. I mean, well, yes. I mean, there is power hour for the stock, but not for the options. So.
Not for the options. Okay, that's a good note because I'd hate to get stuck with it at the end.
Yeah, yeah. If you ever go to a stock on Friday and you look at their options list, like at like 2 or 3, it'll like show like 0.
Yeah, you should definitely put that as a tip in a video. Don't trade power hour with options. Okay, and then also, I'm trying to think when I pulled it up. Okay, when it says, so let's say your max loss is like the amount you put in, then it says not including possible dividend risk. What is that dividend risk that they're speaking of?
So a dividend risk, like let's say, I don't know, Ford has, I don't know, what's Ford at, like $11 maybe, something like that?
Yeah, something like that.
So let's say its dividend is like, I don't know, this is probably a lot, but like 50 cents a share. So let's say the dividend is aftermarket on expiration,
Yeah.
and it expires at $11, and let's say your break even was at $11. However, at the end of the day, you have that dividend, so it subtracts the 50 cents from the stock price, because that's how they get the dividends. They take it from the stock. So 11 minus the 50 cents would bring the stock down to 10.50, and so you'd be under your strike price, and it would expire worthless.
Oh, okay. Well, I mean, I don't think I'll ever fall in that scenario. So.
Yeah.
Okay. I'm trying to think what else. Okay, and then when it says like your resulting buying power for stock, and it says like, for example, it says 32,000. Like, I don't understand what that means. Like, where are they pulling that number from? Like, how is that?
Do you have a margin or a cash account?
I have margin.
Margin account. Okay, so margin is like a 50-50, but I'll explain first on cash because that's what I use. So like,
I used to use a cash account, but yeah. Go ahead.
So let's say I want to buy 2 options at $2 each. So my buying power is 400, because the 200 a contract times 2 contract is 400. So that's my buying power. But now if your margin, you only have to put down 50% of that, so your buying power would be $100. No, $200.
So since I'm using a margin account, let's say.
So basically what you're buying is half of what the total cost is, because you put up half and then the broker puts up the other half.
But what happens if I want to put up the full? I can't do that?
You can't do that on margin.
You're kidding me.
That's why it's weird like that.
Oh,
That is why when you sell on a margin, you don't get the immediate settlement of funds, because the broker also wants their settlement. But on cash, since I'm putting up the whole amount, when I sell, I get my amount back. Like on the same day or the same minute. So.
Shit. That sucks. Okay. I did not know that. And I already tried talking to them, switching it back to a cash account. They're like, yeah, we don't think we can do that. That'd run into more problems. Golly. Okay. Huh. So
I don't know how, but like you can go into like your TD Ameritrade settings and make a whole new account, and you can just make it a cash, and then you can transfer like from the different accounts.
Okay. Yeah, that's probably a good idea.
So you could have a margin for the ETF trading, and then you could have your cash for options.
Yeah, that's a good idea. Okay. Yeah, and plus I don't have to worry about PDT rule.
yeah, it's awesome. I think my day trade counter for one day was like 4, and I was like, this is awesome.
That is good. Huh. So do you, like, let's say like on big plays, do you only try to like take snippets of profit along the way, or do you usually write it out? I mean, I understand it depends on how it's playing out.
Yeah.
But from what you said, like you did 4 trades in one day. I don't know. I feel like if I were to try to do 4 trades in one day, I'd like 2 of them would equal out to the other 2. And I'd 0.
Yeah. It really just depends on if I'm up or not. So like, yeah. So I just keep trading as long as I'm green. But then when I hit that one red trade, then I just stop. But on the duration of the trade, it just depends on where my support and resistance lines are. Like, you know, if I have that margin for it to move, then I'll just wait it out. Okay. But if not, if I don't have that margin, like if I know it's going to be like a quick pop or something, then it's just a quick trade. It's not.
Okay. Let's see. And so how can you tell when you say a naked option, what is that versus like other kinds of options?
So a naked option is when you buy like just a contract. So like a covered so it's called naked because you don't have any covered position. You have nothing protecting you. So like if the option goes to 0, you lose everything. That's why it's naked, because it's just the contract. Now a covered contract or a covered option would be like you buy the 100 shares and then you buy a put, because you have the put contract and then you have the shares that cover you. Or you could, buy one contract and then sell another for a spread, and then one contract would cover the other one. But naked contract is just when you buy a contract and you sell it. You know what I mean? It's not like you have nothing, no quote unquote defined risk with it.
Yeah. Okay. Yeah. That makes sense. And so, have you ever done any swing trading with options, or do you strictly just day
I
trade?
did until that huge drop in S&P 500.
Yeah. Okay.
Because you could basically just buy a call on a dip and then like wait it out and you were fine.
Yeah.
But that doesn't happen anymore, so I had to stop.
Okay. Yeah.
It just depends on what the market is doing. If it's continually going up, then I would love to swing because it's less time. I just buy it and forget it. But I've seen people, like, oh, it has to go down, and then like it like for some reason, for no reason, like skyrockets the next day. I'm like, oh, sorry guys.
Yeah. Yeah. No, I totally understand. Like trying to do call outs, things like that. Someone's always wanting to play the blame game.
Yeah.
Yeah. Okay. Well, I'm trying to think. I think that's about all I had. Yeah. So I don't know. Some elementary questions. I know some of them were covered in your videos, but I still didn't quite understand. But
It's fine.
yeah. Thanks for the clarity, dude.
Absolutely.
Yeah. All right. So, what you going to school down in Austin?
No, in Houston.
Houston. All right. That's good. That's
Yeah.
awesome. So, what oil and gas company do you work for?
It's a smaller one. It's basically like Exxon, but
Mhm.
smaller.
Okay.
So
Okay.
we have
So, is
a
it like a
few rigs.
refinery, or is it like
They
their
they,
headquarters?
they have rigs, and I don't really know
Okay.
what they do. I just do the IT stuff. So.
Yeah. Okay. That's awesome. That's good that you already have an internship at your age. That's awesome.
Yeah.
Yeah. Okay, dude. Well, appreciate you taking time out, man.
Absolutely.
Yeah.
I hope it helped, and I hope you learned something.
Yeah. No. Definitely. Definitely. Yeah. And if you ever want to bounce some ideas, just hit me up, dude.
Okay, for sure.
Yeah.
All right.
man.
See you.
Take care.